Senate passes National Rice Development Council bill. Securities and Exchange Commission (SEC) warns capital market operators against working with clients linked to proscribed terrorist groups. Nigerian stock markets maintained steam in the week, plus oil prices hover around rates last seen in 2014, supported by supply concerns. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Leah Cotton Babatunde. Good morning and welcome to the Business of the Day. A sequel to the achievements recorded with the Anchor Boroughs initiative, the federal government has again demonstrated its emphasis on the repositioning of the agricultural sector, as the Federal Executive Council at its meeting this Wednesday gave approval for the provision of farm inputs and equipment worth billions of naira to boost the National Youth Farmer Scheme.
Food security of this country actually depends on when we take charge of our production, and the federal government is not just investing or promoting rice; it's promoting 23 other crops, and this is another example of how we are trying to penetrate down to encourage our farmers, our young people to own land. We give them land, we prepare the land for them. We also give them equipment, and fertilizers and other agri products to ensure that we have.
After President Muhammadu Buhari unveiled a 1.2 million bag paddy rice pyramid in Abuja this week, the Senate has passed the National Rice Development Council bill Wednesday. This will further provide the legal framework for the presidential initiative.
We have Paddy Rice Dealers Association of Nigeria, the Rice Farmers Association of Nigeria, the Rice Processors Association, the Millers Association, and many others. There's no rallying point for them. So this bill seeks to establish the Rice Development Council.
That the Senate do consider the report of the Committee on Agriculture and Rural Development on the National Rice Development Council.
We expect that this will go a long way in ensuring that we have the right seats, we have the right environment as far as rice production in Nigeria is concerned.
Nigeria Securities and Exchange Commission (SEC) has notified capital market operators not to work with clients related to proscribed terrorist groups in any part of Nigeria. The SEC disclosed this in a circular after Nigeria's Justice Ministry revealed a gazette declaring bandit groups operating in any part of the country as terrorists. They added that existing CMOs would be screened prior to executing any transaction from the date of the circular. The circular also stated that capital market operators are required to screen and verify every client against the above proscribed groups and any other proscribed terrorist groups. On the commodities market, oil steadied on Thursday, clawing back losses earlier in the session as strong demand and short-term supply disruptions continue to support prices close to their highest level since late 2014. Brent crude futures fell 17 cents or 0.2% to $82.27 a barrel, having dropped more than $1 earlier in the session. The global benchmark touched $89.17 a barrel a day on Wednesday, its highest since October 2014. U.S. West Texas Intermediate crude futures were up 7 cents or 0.1% to stand at $87.03 a barrel, having also shed nearly $1 earlier. The WTI climbed to as much as $87.91 on Wednesday, the highest since October 2014. World oil demand growth in 2021 is unchanged from last month's assessment at 5.7 million barrels per day to average 96.6 million barrels per day. The latest OPEC monthly oil market report indicates an upward revision in fourth quarter 2021 amid better than anticipated transportation fuel consumption in the Organization for Economic Cooperation and Development (OECD). Oil demand growth in the OECD is estimated to have averaged 2.5 million barrels per day. In the non-OECD region, oil demand growth is estimated at 3.1 million barrels per day for the year. In 2022, the forecast for world oil demand growth also remains unchanged at 4.2 million barrels per day, with total global consumption at 100.8 million barrels per day. In the OECD, oil demand is forecast to grow by 1.8 million barrels per day, while in the non-OECD, oil demand is projected to increase by 2.3 million barrels per day. High oil prices boost commodity prices while dollar rally slows. A look at the commodities market is next. The Pan-African Payment and Settlement System (PAPS) was launched by President Akufo-Addo of Ghana last week and foreseeing $5 billion annual savings for Africa. PAPS, developed by the African Export-Import Bank, Afreximbank, is expected to boost intra-African trade by transforming and facilitating payments, clearing and settlements for cross-border trade across Africa. It will make it possible, for instance, for a teacher in Egypt to buy stocks in Johannesburg Stock Exchange, and also for Kenya business to get paid for flowers delivered to Mozambique within 10 seconds. So, after the launch, what next? That is the center of our discussion this morning on the program. And our guest is Adedayo Dumoye, Principal Partner at Think Firm Consulting. Thank you for coming on the program, Adedayo.
Thank you for having me. It's my pleasure to be here.
Great. You were in Ghana last week for the PAPS launch.
Yes, I was there. I was there at Kepsinki Hotel when the deal was done and another milestone, another barrier was removed from trade facilitation across Africa.
But perhaps you give us some catch-ups. What were the exciting moments of the day?
One of the exciting moments, funny, was the speech that was delivered by the finance minister representing the president of Uganda. It was he read verbatim what the president wanted to say to the audience, and it was a nice way to see the minds of our leaders, how much support that they have put into after this trade launch. It was also very, very key, the keynote given by the Central Bank of Nigeria, the governor of the Central Bank of Nigeria. Nigeria has been one of the very strong supporter of PAPS because, I mean, when it comes to the financial institution, Nigeria is one of the strong ones in Africa. And the CBN governor made it point blank to say that we are fully in support of PAPS.
Okay, with Nigeria being a key player in this, perhaps you would like to let us in. What are those vital things we need to achieve when we get on board PAPS?
Okay, from my perspective, I want to believe that Nigeria, because the CBN governor is actually the chairperson of the PAPS implementation.
Great.
It means that we are very much in advance of so many other African countries. With the launch of the e-Naira, it shows that Nigeria is ready, and you will notice that immediately we launch ours, Ghana tried to jump on board as well. So of the 6 African countries who are doing the better testing for PAPS, Nigeria is one of them. And I would say if I'm not mistaken, maybe we are 90% ready. Our backbone, our fintech industry has demonstrated that they are capable. So it's a matter of other African countries joining in, and Nigeria will be ready to plug in. Nigeria is already plugged in. Nigeria, Liberia, the Gambia, Guinea, and Ghana. These are the countries who are already plugged in into PAPS.
So what does it mean for players in the fintech space in Nigeria?
Very great. It means that they can enable transactions not only in Nigeria but across Africa with PAPS running in background. It simply means that when an average fintech in Nigeria, not mentioning any name, wants to enable transaction interstate, now they can do it across border. So if I have a wallet that is enabled by any of the fintechs in Nigeria, if I go to Ghana, I should be able to use that wallet to make payment as well, instead of having to carry the normal MasterCard, Visa, and the other payment enablers that we have at the moment.
Okay, before we take this conversation further, for the average people on the street, a lot of people are grappling with understanding what this means. So perhaps we can just step it down a bit and say, really, how does it work? For instance, do I need to open an account with an institution? Do I need to maintain the banking facility I have running now? What exactly does it entail?
Okay, for an average man on the street, the good news is you don't need to do anything differently. PAPS is going to run at the background. It's going to tie into existing infrastructure that the CBN has already. And the good news also is that you don't need to open a bank account in Ghana, in Togo, in Zimbabwe when you want to do business with them. What PAPS does is to do the linkage between your bank account, your wallet, and their wallet, and make that transaction seamless, such that you don't need to pay them in dollars or pounds or any foreign denominated currency. So when let's say your customer in Niger quotes for you the price of a product that you want to buy, when you are paying them with your naira. You don't need to go to the black market and get dollars for you to make that transaction. That is wonderful. And then the speed of it is, currently when you do a transaction on any of the payment fulfillment platforms like MasterCard that we have, it will take sometimes days, sometimes at the least maybe 24 hours for them to get credit. PAPS promises you instant or near instant payment, maximum 120 seconds for you to get value for money. So it means for an average businessman on the street, you can turn over your money quickly and you can get value for money and use your money, the cash you don't have so much of, you can use it to do so many transactions all in one day because of the speed of PAPS.
Okay, when we talk about the speed, now a lot of people will be asking, how soon are we going to start these transactions?
Great. I would say if you want to do business with someone in Ghana, for example, for now it is up to the CBN of the two countries to do the last mile, which is to do the final integration, and then all the other banks that are signed up onto the CBN will be able to do these transactions. So it is in the purview of the CBN to make sure that before, I believe maybe the first quarter of this year, we can start having transactions. Beta testing has already gone successful between Nigeria, Ghana, Nigeria, Liberia, and all the first 6 countries that signed up. So in the nearest shortest time, I believe the CBN will be rolling out the awareness to make traders and players know that there are opportunities there. You don't need to travel to Ghana with cash to make payments for your transaction.
Okay. So do you think anything can go wrong with transactions?
Possibly so. Like every other man-made system, some things could go wrong. But the robustness with which the developers of PAPS have put into consideration, and I'm as far back as I think since 2002, 2012, the idea of PAPS has been created. So if it has taken them this long, I believe they would have put into consideration all that could go wrong, and that is what the beta testing is for. Actually, my own concern would be how soon will all the other countries tie into PAPS? Because, for example, Nigeria's biggest traders, South Africa and the likes, are not in the WAMZI, that's the West African Monetary Zone. And so far, most of all the six countries that I've mentioned that have tied into PAPSS are in the West African region. So it is a matter of time for the other ones to see the opportunity and grab it with both hands, and then it makes it easier for cross-border trading across the whole of Africa.
Okay, Amos Sali, thank you, Dayo, for coming on the program.
Thank you very much.
I've been speaking with Dayo Adedayo Dumoye, Principal Partner at Think Farm Consulting. Thank you. Next on our program is Surviving COVID-19 series, and we bring to you a chat with a perfume vendor packaged by Musa Abubakar. Let's hear his surviving COVID-19 story.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
My name is Victoria Tolagbe, the CEO of Enverge Affairs Limited. We major in fragrances, different fragrances. We have our pocket perfumes, we have our smart collections, we have our perfume oils, we have our car diffusers, we have body spray, body mist, anything fragrances. It was really hectic on us, especially those of us who are just starting our business as at then, and we have to stay at home. There was no sales, we couldn't contact people, we couldn't advertise, we couldn't do anything. So business was slow, and it was really hard on us. But right now it is better. At least we can go out, we can market, we can come for fairs, then no fairs, you can't come out, and then the vaccine is helping. People are believing in, okay, once you take the vaccine, yes, you can go out and do your normal business, and we are hopeful that it will get better. Not yet. For me and for my brand, I have not. But people have been testifying that they have been going forward, and like Ministry for Women Affairs, Bank of Industries, they've been coming to people's aid, and I think they are doing well in that aspect.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
The bulls are still taking the lead on the Nigerian equities market as midweek trading ended in positive territory. The all-share index advanced by 1.73% to 45,430.14 points, up from 44,655.89 points recorded in the previous session. Market capitalization rose to 24.476 trillion naira. 252.9 million shares exchanged hands in 4,218 deals valued at 8.925 billion naira. Guarantee Trust Holding Company PLC, Dangote Cement PLC, and FBN Holdings led in terms of volume of traded stocks. And the market will be resuming on that positive note this morning. And away to the global market scene where Asian shares rise as China cuts key mortgage rates. Here's Nneka Oku with an update.
Inflation concerns have dominated markets around the world in recent months, and investors are nervous over the U.S. Federal Reserve trajectory for hiking interest rates. Meanwhile, markets in Asia Pacific mostly rose on Thursday as China cut its key lending rates. Hong Kong's Hang Seng Index led gains, jumping 3% as technology and property stocks rose. Japan's Nikkei 225 also jumped, climbing 1.11% to close at 27,772.93, while mainland Chinese markets were little changed, with the Shanghai Composite near the flat line. European stocks are expected to open higher Thursday morning as investors appeared to brush off concerns about rampant inflation. The UK's FTSE index is expected to open 15 points higher, Germany's DAX 9 points higher, and France's CAC 40 up 9 points. US markets are little changed this morning after another unsteady trading session overnight as investors remained cautious amid rising rates, with the Nasdaq dipping into correction territory.
Africa has a lot to offer to investors in productive sectors across agriculture, manufacturing, and digital trade. But for so many years, the tune was not in sync as trade relations were poles apart between member nations. The African Continental Free Trade Area is one of the instruments governments of African countries are using to drive deeper relations through various trade corridors to the intra-African trade. Comfort Amadou in this report takes a look at the year 2021 in this regard with what strategies, are being deployed to remove barriers to the push for a common market space, with more countries trading under the new economic bloc.
With a market of 1.3 billion people and combined GDP projected to reach $7 trillion United States dollars, trade experts say it is time to position industries to supply the African Continental Free Trade Area. The African Continental Free Trade Area, which presents African countries, especially manufacturers, with the opportunity to expand to new markets in the continent for export of value-added goods and services, was signed on 21st of March 2018 at the Extraordinary Summit of the African Union in Kigali, Rwanda, and came into force on 30th of May 2019. Nigeria signed the agreement on the 7th of July 2019 and ratified it in November 2020.
Nigeria is a huge market, both for buying and for selling, both for export and for import. So it's a huge thing for us, especially when we are struggling with the foreign exchange to accumulate foreign currency in our reserve, and we can also use it to do trade across the sub-region.
Dwindling oil revenue and global economic challenge exacerbated by coronavirus pandemic dealt a huge blow to trade. This pronounced the need for countries to switch into the AfCFTA.
We are setting up trade houses. We call them export trade houses. One in Lome, it's a pilot scheme, one in Lome, one in Nairobi. And the idea is just to assess these African markets where Nigerian products will be taken to those trade houses, and people from neighboring African countries will assess them and buy them off.
The idea is to also include the smaller businesses in the conversation, expose them to trade and investment opportunities. Nothing says that KwaZulu-Natal and Abia State in Nigeria, for instance, can begin to exchange information, knowledge, ideas, technology, and begin to do business together all across borders,
And with the opening of the African Continental Free Trade Area, you don't want to become a dumping ground. How don't you become a dumping ground? You must manufacture more, you must produce more, and then you must export.
With the AfCFTA trade negotiations in its second phase, issues around the rules of origin, elimination of tariff and non-tariff barriers, free movement of goods and persons, as well as the need for a common trade currency, resonates as governments look to strengthen the trade pact.
If we are able to trade amongst ourselves with one particular currency, we can then determine what profit margins are coming out of those trades and can go on to even support further entrepreneurs who have goals and visions to create businesses.
We have to prepare not just to open up our economy, but we need to have a certain framework of financial support for SMEs, for startups. They also need to focus. That is very, very important. Without financial support for these companies to export, they cannot withstand the competition.
Though no significant trade has been recorded in the last 1 year since the takeoff of the AfCFTA, the free trade area is expected to enhance investment in African markets, particularly in productive sectors, manufacturing, job creation and digital trade, with Nigeria having a competitive advantage in the newly enlarged market. In Abuja, Comfort Amadou.
And of course, here in Nigeria, we'll continue to leverage on this vast market potential on the continent. On that note, we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. We are also available on all social media platforms. Business Express returns Friday at 3 p.m. I am Leah Katun. Baba Tunde.